This is Invisible Inc., the podcast for under-resourced women entrepreneurs. And I'm your host, Shubha Chakravarti, founder of Achieve. Join me as I talk to women entrepreneurs about the nuts and bolts of their journeys and to experts who will give you insights that are hard to find anywhere else. Let's jump in. How do you find a big market opportunity in a deeply technical and even boring field like chemistry? How do you overcome years of training as a scientist and learn a totally new and uncomfortable skill set as a founder? And when you know you're new, how do you develop the insight to know which advice to take and which to leave alone? In this episode, scientist and founder Lieza Marie Danan talks about her long journey in the field of mass spectrometry, how she learned to identify a big market need, patiently hone her skills to build an enviable network of other scientists, transition into a founder who mastered pitching, financial skills, and much more. Now, here's Lieza. Good afternoon, Lieza. It's an absolute pleasure to have you here today. Welcome.
Hi, Shubha. This is definitely an honor and a privilege to be with you this wonderful day.
So I know you have a pretty fascinating story. You started off with a PhD in chemistry. So what made you move from academia into entrepreneurship? And was there like a crossing the Rubicon moment that showed up?
Well, between academia and entrepreneurship, there was that industry phase of my life where I worked as a scientist and had a function in the drug development industry. The jump was really from industry to entrepreneurship. You can say like it's a combination of different factors. The biggest one would be frustration. I'm a mass spectrometrist and I've been a mass spectrometrist for the past 25 years. And I would say the growth of the different tools needed to become an excellent mass spectrometrist has been extremely slow. And that caused a lot of frustration, accumulated frustration, especially when you work in industry when the pace is so fast. And you need these tools that has to be spot on. If not, you're not going to be sleeping. You're going to be staying up late until 1 a.m. Try to figure out what's going on with your tools, right? Your hardware and software tools. And so that was a Rubicon moment. Like, I'm tired of complaining to the hardware and software providers. I might as well create my own software, disrupt this entire slow process and make a big difference, improve the lives of people like me, while also applying it in the drug development space where you can help patients have access to novel therapeutics safer and faster.
For those of us who are not spectrometrists, and I count myself as one of them, what, in layman's terms, what is mass spectrometry and why does it matter to people like us?
Maybe you will remember this from your high school chemistry days. Everything around us and us, we're built of molecules. We are composed of molecules. And mass spec instrument or a mass spectrometer is the most sophisticated tool out there that can measure the mass or the molecular weight of individual unique molecules. And it can also provide information on its amounts or what we call concentrations. For example, you can calculate how much vitamin D is in your bloodstream or determine how much stress hormones are in your bloodstream, that kind of thing. Or let's say, for example, in the drinking water, right? Okay, how much bad pesticides are in drinking water? That's like a typical exercise for a mass spectrometer. So it's extremely important information that it can generate.
You sold me at vitamin D, so I'm in. So what does Libertas Biosciences do in this field?
Our high-level value prop is we improve human health by helping get new therapeutics to patients faster and safer. What we actually do in the company is we accelerate drug quality testing using mass spectrometry and artificial intelligence. All of these new therapeutics out there for cancer, for cardiovascular diseases, for curing COVID, these are all novel drug designs. And what we do is we accelerate the testing process so that this novel therapeutics can advance quicker to commercialization or FDA approval.
So essentially, you're an enabler to the pharma industry and you're selling into the pharma industry.
We are enablers of drug development leaders. Yes. Biopharma and pharma companies. Yes.
Is it fair to say your industry focus is 100% the pharma sector, or are there other sectors that you supply to or could
We're,
supply to?
we are slowly getting pulled to other sectors. It's very interesting. Clients from other sectors are inquiring already if we can do specific things for their sector. But right now, we're extremely focused. We started with biopharma. My background is biopharma. I spent 10 years of my life in drug development. So that's our niche right now. But we are also able to answer the questions of other sectors.
So you've been in the business, so you understand it intimately. You talked about how your frustration led to the creation of this product. So you know that there's a market. How did you then go from that to developing what a product might look like and then validating how big the market might be?
Okay, so maybe I'll start by saying that I was in the market. I'm a market insider. I'm a biopharma insider, and the early investors and advisors of Liveritas are mostly biopharma insiders. They were my colleagues in this startup we worked for that was purchased for $6 billion as a unicorn. So we're pioneers, we're biopharma insiders. We know the pain points. It helps a lot in how we are crafting the product and the services. I know from the get-go that product design will continue to evolve as we create the business because you need to start focused, right? So the product will be different when you start focused, and when you start expanding, you need to be able to keep on adding. So the product design is meant to be expandable. That's one thing that we decided on very early on. It has to be modularized.
And when you say modularized, is a product a combination of hardware and software? And if so, which part of it is being modularized? Is it the function that's getting modularized? So you go from more basic to more advanced?
Yes, exactly. Right now, we are tech-enabled service provider, and that is a strategic decision. That is our first business model. And we know that in the future, I believe in about 2 months, the real product is going to emerge. To be able to operate efficiently in the tech-enabled service, the modularization of both hardware and software has to be in place. And it's a very strategic how we're building it from something so basic at its core, and then you slowly expand it. Now, from the software standpoint, like we are developing our own platform, and later on it will be a SaaS business model. Even with that software, it's modularized as well. It starts very basic, and then it can be expanded. That's why I'm talking about modularization.
Excellent. And I love it. So walk me through like the product development process. What were the expertise areas that you needed from a hardware standpoint? What did you need from a software standpoint? And how did you put together these skill sets? And where did you come in, and where did you have to fill in other skills with other folks?
Oh, very interesting. So let me start by saying that most of the things that we are doing right now, I've done it before in that previous company that was acquired as a unicorn. And I know exactly how I created it. And it was very modularized as well. Our software development team will help me speed up my turnaround time. So how do I translate that into Liveritas? I just had to repeat what I did in the past, so to speak. But now I partnered myself with my co-founders. And one of them is a graduate of chemistry with computer engineering, so double degree. So she knows how to conceptualize it from a programming standpoint, from software development standpoint. Until later on, we expanded it with another classmate of ours with a double degree in chemistry and computer engineering, but he practice more of the software development expertise. So it's like, okay, we're all interconnected, right? There is first the scientist mindset, and then the software development hybrid mindset, and then the 100% software developer. So those three people are very important to be always aligned in terms of pacing of creation of the software product.
Help me understand, what is the most difficult part of crafting or architecting this startup? There's the business model, there's a whole bunch of other things. Which was the hardest part? Why was it hard? And how did you crack that?
Oh gosh. hardest part is fundraising.
Surprise.
Surprise. And the reason behind that is I'm a scientist and my brain functions in a totally different way, away from storytelling. I'm still learning this. I had to switch my brain in a way where I can story tell, but also stay accurate as much as I can. So stay loyal to being a scientist and not be a storyteller where I'm going to promise you the moon, the stars, and everything in between. Or else it's not going to be aligned with my value system and I won't be able to confidently say it. So where I operate is highly technical. The world of drug development is extremely technical. And you have to explain that in a way where lay people can understand it. It's the most challenging aspect for me. Not selling to biopharma. That's like second nature for me. Starting a lab, I've done that 8 times already. So pitching, storytelling.
So before we get there, I want to talk about the business model and particularly the revenue model. You talked about mass spectrometry as a service, and SaaS is the model that you use. Did you consider other options? What were your other options? And how did you pick this revenue model as the right revenue model for you?
Okay. On the first year during the pandemic, my advisors brainstormed this with me. They tried to sway me into going straight into a SaaS business model. We explored it for a bit. However, I knew it was not going to be a great fit for what I want to achieve or what I want to build. Because if it's a SaaS business model straight on, you'll be dependent on software developers, number one. Number two, dependent on so many partnerships with biopharma and other people's data. And in the world where I operate, the quality of data and consistency of data is extremely important. You need to be able to control it. If you start with all types of information, you're not assured of best quality information. You will not be able to get to the unique insights that you want to put out there. So I convinced them that the way to go is to generate our own data. And in order to do that, we need to have our own lab. And it doesn't make sense to not make it revenue generating. And so it was natural that the strategy would be create a testing lab, generate your own data, not the data of our clients, of course, generate our own data along the way and use that as the basis. Create that business model where you can go for profitability. And then later on, the tech-enabled services business model can fund the software development. And that's where we are right now. We're at that cusp right now where next month we will be cash positive.
Congratulations.
Thank you. And the tech-enabled service has that capability to fund the entire software development process.
And that's fascinating because it sounds to me like, first of all, you had to go against and do some convincing of against a standard and no-brainer business model to demonstrate why yours is the more value-adding. But also, did it involve that you needed more funding to then build the lab, which you wouldn't have had to do? And then how did you get over that?
So we had to raise money. We calculated it. It will take about $3 million to get there. But luckily, we don't need to raise that much. So figure out a way how to be extremely lean the past 3 years. So the first raise was about very little during the pandemic. But after the presidential inauguration in 2021, that's when we were able to raise up to $1 million. Yeah, so the period of 12 months, we were able to raise $1.2 million. That got us the laboratory, the instrument that we need, a lean founding team with diverse skill sets, and what we needed to put ourselves out there and start working with clients. The fundraising is a very interesting art form. Maybe we got in touch with like over 200 investors and pitched to maybe 100. We really put ourselves out there. It's good to be part of an accelerator because the first 50 investors will be through the accelerator. Maybe over 100 investors will be introduced to. The lesson I learned is people who look like you will fund you. They are the lowest hanging fruits. Again, people who look like you will fund you. It's easier to fundraise from them. And people who know the quality of your work will be the ones who will fund you and who understand the industry. So no matter how technical my pitch was, obviously people understand the industry, the pain points, the potential. They're the ones who wrote the checks. And then the rest of the money I had to bootstrap. And it worked out because we got to where we are right now. Maybe we put in a total of $2 million so far. Extremely lean team. And now we're in 3 different countries. Actually, we're in 4 different time zones right now.
How did you bootstrap? Did you offer consulting services? Like, what was your strategy to bootstrap?
I was lucky to be able to sell some of my shares for my first startup. And so I funneled part of that money into my company. Other bootstrapping activities, techniques would be getting paid by equity and no cash. You will have to find consultants, you will have to find co-founders, you will have to find founding team members who are willing to accept equity over cash. So those are some of the tactics that we've implemented in the company.
And then one more thing on the customer acquisition side. Now, the good news is that you've already had all this exposure. You know who the buyers are, and you're a very convincing seller because you're a technical seller to a very specific pain point. How did that influence? What was your customer acquisition strategy? How did you find your initial customers? And were there any help in providing advanced funding of any kind?
Let's just put it this way. Maybe the first 5 customers were all through referrals. There's one that we acquired through a conference. The best customers, the best clients we have are through referrals.
And who referred them?
Friends from the biopharma industry. I made a lot of good friends in the industry. I made great relationships. I calculated it. Maybe I've interacted with over 300 biopharma scientists, engineers, directors, executives in the past 10 years, like working with them directly. So they know my quality of work. I have a good reputation that I protected in this period of my life working in the drug development industry. And so the only thing we had to do was to be in social media and put the brand out there. Luckily, also my co-founder, Na, she was in sales and marketing roles in the past in different mass spec instrumentation vendors. So she also has a name out there and she has a good reputation as well. And so we combine our networks, so to speak. We cover pretty much California. And I have some friends as well from the East Coast when I worked at a contract research organization in Pennsylvania. We combined that and put ourselves out there. LinkedIn's perfect for that because we're B2B. Our target clients are professionals, our biopharma scientists, directors, executives. My former colleagues in the different companies I worked for, we were all like senior scientists at that time or associate directors. Now they're like senior directors, CXOs. We all grew together and they are decision makers. So it's awesome. Having meetings with our clients right now feel like a reunion with old friends, old colleagues. It's been great.
I just love the networking aspect of it. Just one little drill down question on the social media. So this field would be like the last that I would pick for social media marketing. Just given how technical it is. What exactly did you do on LinkedIn? What did you publish? What did you talk about to build this reputation?
Well, before I started the company, I already had 2,000 connections under my name. So right now it's close to 3,000. So I talk about mass spec. I talk about my journey. I talk about what led me here.
So it wasn't the most thrilling recent discoveries in mass spectrometry or just
sometimes, yes, like something, let's say the FDA has made a very good decision about diversifying clinical trials. I'm like, that's awesome. Put it out there. Talk about the subject matter expertise. The funny part there is most of the people in my network know already that I'm a subject matter expert. And so those who become our clients see that already from our previous interactions or the times when we work together. We're very lucky at Liberitas because this company was built on relationships. My relationships NAS relationships with her former clients. It's all about having good relationships with the biopharma scientists, the other scientists, the biopharma directors, right? And consistently believing that our goal is to produce good quality data all the time. No questions. If we have a team member who doesn't value that, then that's not a good team member. We're not aligned there. But at the core of the culture of the company is integrity of the data that we have and quality of the data that we generate for our clients.
You talked about connections, you talked about relationships, so that brings us to fundraising, which is always eternally interesting topic for all founders.
Right.
So you initially mentioned that you started out with a list of 200 investors, you talked to 100. Walk me through from start, like how did you start thinking about this approach? How did you identify the 200 potential investors? I'm just very curious to hear the whole story.
Oh my gosh. It's just an interesting story for me. I had a list. Let's say, for example, okay, investors of the startup I used to work for became a unicorn. Okay, there's that list. A second list, investors who previously invested or current investors of my first startup. Third list, investors who have no clue who I am, but most likely will be interested in our space.
Because of the sector focus.
Because of the sector focus. You analyze that. And then there's another list. So in the third bucket, you have several sources of names. You can get it from the accelerators you're part of or any other events that you participate in. So these are all like, you start the relationship. So obviously the first two buckets are very targeted. And then you make your calculation when you want to reach out to them. And then the third bucket is your trial and error bucket. So that's pretty much what I've been doing. Again, the reality is people who look like me and who interacted with me in the past and know the quality of my work, they're the ones who wrote the biggest checks.
Okay, so then you have this list of 200. Where did you start? How many months did you allot yourself to get this money? How did you prepare yourself? And in particular, you talked about the storytelling aspect. Can you just walk us through what that preparation looked like, what your challenges were, and how you got better in that?
Yeah, that's several questions in there. So maybe let's break it down. First, the storytelling aspect and the pitch deck preparation. That is a long process. First, you need to start somewhere. Start with your deck. Come up with your advisors. Your advisors has to be diverse and maybe pick two, not more than two, because you don't want conflicting ideas from your advisors. You don't want to be overly advised. Start somewhere. Don't aim for perfection. Create a storyline first, and then come up with your references for each claim that you're adding in your deck. Create your first draft. Circulate to your advisors. Wait for 1 week or 2 weeks. And then integrate, pick and choose the feedback that you would like to integrate into your deck. So that's your first iteration. And then do that over and over and over. Because literally, maybe we have over 100 versions, maybe 200 versions of the deck in my hard drive right now. It just kept on evolving. And if you look at the current version of our deck versus what it was in year one, so different. Allow yourself to iterate over and over and over. And it's a long, tedious process, but it will help you tremendously in the end.
What was the benefit? Like, how did it help you? How did you see the impact of that process?
The goal is to align your mindset into the mindset of investors. I'm a scientist. It takes a while for me to align with the investors. I need to understand what they're thinking. So one of your advisors has to be a VC or an angel investor.
Can you give some examples of maybe types of feedback from the investing type of advisor that helped you reorient your approach or your story or a pitch deck so that it would be more investor friendly versus scientist friendly?
So after the downfall of Silicon Valley Bank, the expectations of investors has shifted dramatically. Right now, everything is growth metrics. Don't even bother talking about the story of your company. Just focus on revenue, and how things are growing. I got rid of the rest of my deck. I just focus on growth metrics right now, and I sent that to investor. The usual pitch story would be, okay, make highly simplified decks that will capture the attention of an average investor, a non-technical investor. Make sure they are simple words and not scientific words. Those were the advice they gave me. And then everything else is like as expected, right? So you need to show your forecast, you need to show your market. One very helpful metric was the serviceable addressable market, because you have your TAM, astronomical number, but really, how do you calculate your SAM? What is it that you are targeting? And assume that maybe you work with 5% of your SAM, and that's still a significant number. And present that, because usually you would want that to be above $100 million. Every advisor, depending on which coast they are from, will have totally different expectations in your deck. So be open to having at least two versions of your deck.
The East Coast version and the West Coast version.
Oh yeah, different mindsets.
Is it true what I've heard that the East Coast is very focused on metrics and economics and revenue and profitability, and the West Coast wants to change the world? Is that true?
Oh
That's a
yeah,
stereotype.
absolutely, yes. No,
And
it's not a stereotype; it's reality.
Oh, and has that changed post Silicon Valley Bank?
Yes.
So have they become closer together now that?
Oh yes.
Much more alignment towards the economics.
Oh yeah. Now everything's growth metrics.
So maybe 1.5 versions of the deck as opposed to 2 versions of the deck.
Yeah, finally there's alignment, right? Because
Great.
before I was like, okay, this person is telling me to do it this way, and the other person said that's wrong. I'm like, where am I going with this? Like, I didn't know that there should be 2 versions at that time. So
how did you factor in this at the time, how did you factor in any differences between East Coast and West Coast investors? How did you prioritize? And then what was it like to go pitch these investors, especially if they didn't look like you?
So how do I prioritize? Who's writing a check first? That's best prioritization. First is, it's not necessarily the size of the check, right? Who's going to write the check first? Who's the lowest hanging fruit? That's how I prioritize. If it's going to take me a year to convince this person, right? No, I'll just table it and then come back later.
So how do you figure that out? I mean, you got your list of 200. Let's say you narrowed it down to 100. They can string you along. You can have a conversation.
Oh, yes. So be careful about those people who string you along. The moment they said, not now, maybe later, that's a no. So table it already, right? Just be sensitive to how they're saying no to you. There are many ways of saying no, for sure. So if an investor is the one emailing you for reminders to meet with you, that means they're extremely excited. Go for it. Prioritize that investor. If that investor has not emailed you back for like a week or 2, that's a no already. Those are clear indications for sure.
Okay. And then in the conversations themselves, like when you're pitching, you're having the conversation, you're explaining, walk me through what that process felt like. What were the challenges that you felt you faced just because either of your gender, your ethnicity, whatever the case might be?
When I moved to this country, I had to accept the fact that I will always be underestimated. And in the middle of my sentence or trail of thought, somebody will try to interrupt me, or they will interrupt me blatantly. So it happens too in pitching. You have to accept that reality and learn to navigate around it. I notice as well, there are certain people I interacted with no matter how I say things, I will always be wrong and in how I stated it, because how they want to hear it is better. So it becomes like an ego play. It's not fun, but you really need to learn how to pacify your ego at the end of the exercise, even when how you stated it was exactly how they stated it a week ago. There's a pattern in here. I'm smart enough to know what's going on here. So, okay, I'll just let you speak and I'll nod and I'll learn how to direct you to where I want you to be.
And what were some of the other?
Because they're this personality that, they always have to be right. But actually, to be honest with you, do we really want to be funded by those people? No, right? You want your investors to be partners. The people you want to surround yourself with in your company are those who would be great advisors and see you in the same level where they are, and not like you're a slave.
Sounds like through your process of identifying, filtering, talking to people, you were able to quickly filter out which ones would be in the partner bucket and which ones would be in the power bucket, for lack of a better word.
Yeah.
Any other experiences in terms of questions? We've heard about this promotion versus prevention bias when it comes to male versus female founders. What was your experience in talking to investors about whether the questions were promotion or prevention focused, or did it even come up in the conversations? Basically, there's some research that's come out that says that when male founders are questioned by investors during pitching, the questions are around how can you make this bigger? Where is the opportunity? How big can it get? And when they're asking and questioning female founders who are pitching the exact same business, the question is around how will you make sure that you don't drive this into the ground? Those are prevention questions. So you're forced to keep defending yourself. And then they're like, you're not excited enough. It's not a big enough opportunity. So did you ever face that?
Oh, yeah. So in the first year, I was called a crazy person for thinking that I can create something big that has excellent product market fit. If I was male, I would have been called a visionary. And I'm extremely confident that I can create something that big. Big in the sense of the forecast. I'm not saying I created that already, but you want to forecast something big. And yeah, I overheard, I guess I was not supposed to hear what that person said, but I was called the crazy lady or delusional.
That must have been tough. How did you get over that and continue to fight and keep working?
Because I know the company is created in relationships and I know what my background is, not my background, but my experience in the industry, I have so much conviction and confidence in what can be created. That allowed me to keep on moving forward no matter what. Because I witnessed it already in the industry. I've been in a CRO testing facility. I worked in a large biopharma company, one of the largest and seen as the most innovative company. I work in a startup that filed for an IPO. I work in a startup that was acquired as a unicorn. I'm like, what else can you experience there? I witnessed it back in 2010, 2012, after the economy crashed, how testing became a booming business. Us scientists were required to work over the weekend. The backlog was over $1 million just for mass spec testing. And I'm like, whoa, okay, this is a new thing. Like, it's prime time for mass spec. This is 2010. As early as 2010, this boom started happening. And then guess what's happening right now? Ooh, there's an economy crash. Something's not quite right in the market right now. This is it. It's happening again. So I can see some parallelisms to what happened 10 years, 12 years ago to what's happening now.
So it sounds like being able to step back a little bit away from yourself and reorienting towards the problem you're solving and your confidence in your own expertise is what helped you get over that.
Yes. It's conviction, self-confidence, whatever you want to call it. It's belief in my capabilities. I don't want to sound boastful or anything like that, but I just want to state
Go for it.
I experienced a lot in the drug development industry for sure. I was exposed to so many amazing experiences from a technical standpoint. I learned so much and I'm extremely grateful for all those experiences, including my failures, right? So at the end of the day, it's stepping back, as you said, evaluating what just happened in those 10 years and see how you can integrate all of those positive things that happened there and apply it to where we are now.
One last question on the whole pitching process. You talked about projections. You talked about how they need to meet certain requirements for investors to be excited about your business. How familiar were you with the whole financial modeling piece? How much of a challenge was it? And how did you acquire the level of expertise and mastery of that process that you needed to go and pitch confidently? How comfortable were you with financial modeling?
Okay, had to learn that through my advisors. So during the pandemic, I surrounded myself with advisors from various different backgrounds. They're all entrepreneurs from tech. The entrepreneurs have been around the block for a long time. I learned forecasting from them, financial modeling as well. And how am I confident? I had to learn it over the past 3 years to be confident in really making sure the numbers are correct. And what I like about the current version of our models is the fact that it's now based on 1.5 years of generating revenue. So there's confidence already in the numbers for sure. And also, we filed taxes in the past 2 years. So we know what our operating expenses are and what the breakdowns are. So it's easier to forecast now versus before, like you forecast blank. I forecasted using my background in the previous companies I worked for. But now I feel more comfortable. It's more accurate. It's more closer to reality.
Were you pressed on those questions by investors, and how confident did you feel answering them?
In the beginning, it was not that comfortable. Now I can turn it around upside down, whatever. Yes, I can answer your question. Oh, you think there's an aberration in that estimate? Okay, I think I made a mistake. Let me correct that. I know exactly the mistake that I made.
It sounds like even if there was something that you could have avoided or there was a mistake, you're okay and confident just saying, yeah, it's a mistake, we'll fix it, but I still feel good enough that I understand the drivers of what drives this bus or what gets this moving. That's fantastic. So to kind of round everything off from the beginning in terms of identifying investors, going through the pitch, and then actually talking to investors, mastering the financials. If you had to summarize all of it and say, here's the thing I would give another entrepreneur, say 5 pieces of advice would you give in terms of the fundraising activity?
First, believe in yourself, believe in your capabilities, believe in what you are creating. Because whatever you're creating, most likely behind that is a decade or 2 decades or 3 decades worth of experience. And what you're creating is an integration of all of those experiences. And what you're manifesting is based on how fully integrated you are and how confident you are in what you're building. That's number one. Included in that, of course, is you need to make sure your heart, mind, and body are aligned. So that gives you more confidence about yourself. Number 2, believe in the power of the network you created in your life. I believe, especially nowadays, creating a company based on relationships makes you a strong company. You can tap into your network for finding co-founders, for finding founding team members. You can tap into your network to find partners, advisors, strategic relationships, and early clients. And then also, they're going to be your extended marketing arms. It's very important. Believe in the power of your network. So that's community. Don't be afraid to fail. It's important to just try, give it your best. Don't be afraid to fail. Failing is okay. Iterating is okay. For pitching, not for product, not designed for product creation, okay? For pitching, and be open to the feedback that others are willing to share with you. And you don't need to integrate all of the feedback others give you. You can handpick. What are those that are valuable to me to enhance this? At the end of the day, you're holding on to the steering wheel. You're the one driving this company. It's not other people. Number 5, stay focused. There'll be a lot of noises. Feedback is not noise, not necessarily, but sometimes noise is integrated in the feedback. So learn to tune out the noise. When the noise is, oh, you were just called a crazy lady, like go back to who are you? How many decades have you worked on this field? What are those things you fully integrated? And your self-confidence, your conviction in what you do to tune out that noise, right? And keep moving forward. Eventually, somebody will write you a big check.
Can't wait. That's the beautiful moment. You've talked through a lot of stuff and it's been very enlightening. Through this process, internally, you talked about challenges that you had to face. There are many, but is there one that was particularly difficult or that pushed you to your very limit? If so, what was it and how did you find the strength to overcome it?
Last year, I was diagnosed with classical Hodgkin's lymphoma. So that is a form of cancer. Luckily, it's curable. And so for 6 months, I had to go through chemotherapy. And that's one of the most challenging experience in my life. However, it was also a test of resilience. Going through the same treatment for 6 cycles, 12 times in the span of 6 months. Yeah, it definitely is a test of resilience. So how did I go about this? Couple of things. First, I surrounded myself with love. My parents were with me. So very grateful that my parents were able to help me through the process and recover after chemo as well. Second, there's a book called Positive Intelligence. I went through the boot camp, very, very important tool for so many different things. Keep moving forward. That's definitely one thing you'll learn from it. Third, every person has this maybe 3 to 5 books that changed their lives. So there's one book by Deepak Chopra. It's The 7 Laws of Spiritual Success. I may be quoting it wrong, but it's a small book. I read it over and over and over. And yeah, that's how I navigated it. And just stay focused. Again, go back to conviction, self-confidence. Like, if I can deal with this chemotherapy, no one can question my resilience as a founder.
First off, kudos to you. I am just blown away. And I will send you every positive, healthy vibe there is for your long health and success in every aspect of your life. So on that note, there have been many victories. Clearly, what you just described is one of them. But is there one that stands out in your startup journey that says, that was what made everything worth it?
I think it's going to happen in the next 2 months.
That's great. Well, wish for that. And is there anything in the past that was particularly noteworthy in terms of being just a validation or anything that was a high for you that validated everything that you've done so far?
Yes, there's one. One particular client needed our help, and they were desperate to find the right mass spec testing partner for their drug candidate. They're already in the clinic, and the FDA gave them feedback that their drug candidates needed extended characterization using mass spec. So we responded very quickly. And we made sure that we assisted them by providing them good quality data. And now the drug candidate is in phase 3. They're one step closer to what we call a biologics licensure application. And that is the gating document needed by the FDA prior to final FDA approval. We are helping our clients move close to FDA approval. Phase 3, that's amazing. That's amazing.
I know enough about life sciences to know that phase 3 is a very magical word. So congratulations.
Yeah, not that many. Yeah, I think there are only about 1,000 drug candidates who reaches phase 3 every year. So one of them is the drug candidate of our client.
Congratulations. That's great. So looking back, if there's anything that you'd have done differently, what would that have been if you had to start this journey over?
I didn't know how important self-integration was in the beginning. I'm an immigrant, and I moved from the Philippines to the United States. And within the United States, I moved 3 times. So from UC Davis to Pennsylvania, and then from Pennsylvania to the Bay Area. And then I was moving different companies as well. I had to integrate all of my experiences and the people I met over time in order to really realize the full potential of what I was creating.
So what did that look like? Help me understand what that felt like and looked like.
Well, before, I was second guessing myself, always going after like, okay, I need to meet people, new people, new people, new people to build a company. And then I realized, oh, I don't need to look far. I just need to look back. And now at Liveritas, my co-founders are one of my best friends from college, one of my best friends from graduate school. My founding team members are composed of people from the Filipino-American community here in the Bay Area. Some of them came from the same university I came from in the Philippines. My team members in Manila are from the same university where I came from, or my classmates in college and my classmates in high school. Again, believe in the network. And the people who are our advisors are my former colleagues and friends from the mass spec industry and the biopharma industry. And one thing is for sure that I maintained throughout this process is I kept in touch with people who I believe are experts and aligned with my value system. And so reaching out to them and reconnecting with them was like a reunion. And bringing them as part of Liberitas became relatively straightforward.
That's very helpful and I think on point for so many of us. So last question, if you had to give one piece of advice to somebody else who wants to follow in the same footsteps as you, life sciences, immigrant, however you want to characterize it, what would you tell them?
Again, find your true self. Work towards finding your true self. And that can be done by aligning your heart, mind, and body.
Excellent. Is there anything that you wish I'd asked you, but I didn't?
I think we're good.
This has been a very inspiring and informative conversation, Lieza. I really appreciate you taking the time, and I can't wait to see what's going to happen and how you're going to take your company. So we'll be here rooting for you, wishing you all the best. Thank you so much.
Thank you again for this opportunity to share my journey, Shuba. And I wish you well as well in your podcast and your next phase and your next projects for sure.
My conversation with Lieza taught me a lot about entrepreneurship in the life sciences industry. But these are things that all founders can apply. Here were the big ones. First, she honed her mastery of the market over years, if not decades, understanding the exact nature of the pain that her eventual customers, like pharma companies, were facing. She knew it down to the order flow level and every detail of how that business worked. This set her up to build only what was missing and would be valuable, and then leave out the stuff that was nice but not game-changing. Second, she spent time in a startup that had a successful exit. You don't always have to jump into your own startup. It's totally okay and even desirable to learn on someone else's dime. Last but not least, I was most impressed with her indomitable spirit in overcoming so many challenges, from the industry, her work environment, and most of all, an extremely difficult health diagnosis. She never lost her focus through it all, and yet was resilient enough to know and accept the softer sides of support from friends, family, and colleagues in the industry who respected and valued her. So, what one industry-specific nuance can you master that will give you an unfair advantage relative to everyone else in your field? And how will you act on it tomorrow morning? Thanks for listening to today's episode. We have show notes and more at achieve.co. That's achieve.co/podcast. Like what you heard? Hit subscribe and share with a friend. See you on the next episode. Now, go be an achiever.